Yeah, and I was going to say as well, I mean, the reason I want to look at this was because of the trade deal with Vietnam, and I was kind of blown away by this, but Vietnam's exports to the U.S. reportedly comprised 30% of its GDP last year. So they really needed to make sure they made a deal with the U.S., and I think it's maybe why it wasn't as favorable as some may have thought. But it does look like the tariff rate on Vietnamese imports will now be 20%, and then on goods that are actually originated from another country, they did this because sometimes China will send it through Vietnam, and then to the U.S. is going to be about 40%. There's some confusion if that's tacked on top of the 10% baseline rate. I only saw one article that said that, which would then make it 20 and essentially 50. But the other articles I read didn't say anything about that. The point being is, these are now going to be tariff rates that these companies are going to have to deal with. It is better than the 46% tariff that was initially planned, but it is still a substantial cost of doing business there. And Columbia Sportswear has about 48% exposure to Vietnam, so they have a lot of their supply chain there.